Hello everyone, welcome to Options with Doug. This is my live daily stream that begins at 1:30 p.m. Eastern Time, and I'm live on Bookmap Discord as well as YouTube now. Before I go any further, let me go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And just a reminder, this is a focused channel. And for those folks on YouTube, I'm talking about the Bookmap Discord streaming channel, and as well as what I'm going to talk about. And my focus and the focus of my channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action in futures and stocks. And I have a two-step process for trading. And the first is preparation, and that's based on position analysis. And I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis for trading for the day. I day trade. And this thesis is a thesis for volatility. What is the anticipated trading range for the day? And then also for a directional bias. And sometimes I have a directional bias and sometimes I don't. And then other traders, well, again, I use position analysis. Other traders use other forms like technical analysis or fundamental analysis. And I find that position analysis provides me with a significant edge, and it's a new way of looking at the market. And then the second step of my process is execution, and I look at real-time order flow in Bookmap and market maker hedging flow with Spotgamma Hero. And on topic questions and comments are welcome. And for those in Bookmap Discord, you can post your questions and comments in the options-with-Doug channel, and I will check questions and comments on YouTube periodically. And for those folks on YouTube, I urge you to consider joining Bookmap Discord and taking a look at my channel there. I post a lot during the day there, and that's a lot of helpful information, potential setups. I post my watch list in the morning. So again, I'm glad you're on YouTube, and just please consider joining Bookmap Discord. It's free and open for all. Okay, now let's get started with the presentation. So first of all, there were a couple of news releases this morning. The PPI came out at 8:30 a.m. Eastern Time, and it was both the year over year and the month over month were higher than expected. And the market initially had a negative reaction to that, dropped pretty sharply, and then has been grinding higher up until about noon, and then starting to move lower again. And then also at 10 a.m., consumer sentiment came out and was a little bit higher than expected. And the market did not seem to have much of a reaction to that, maybe a little bit, but much less than the PPI. And just as a reminder, next week there are some very important news items and events that are most likely have a large impact on the way traders are positioned going into that data, and will also have quite an impact on how markets react. And those data items are the CPI report coming out on Tuesday, and then the FOMC meeting and announcement starting on Tuesday, and then the announcement is on Wednesday. And then finally, next week on Friday is the December monthly options expiration. And that is also the quarterly expiration, as typically the largest expiration of the year. So let's start with our position analysis now. And I'm going to start with the broad market, the S&P 500, and try and get through that fairly quickly. I think there were some great setups in stocks today, and I posted a couple of setups in chat, in the Bookmap Discord chat, for NVIDIA and Tesla, and that's what I traded this morning, and I'll talk about that, and also a trade that I posted yesterday for NVIDIA. All right, let's take a look at the S&P 500 right now, the ES futures, and we can see the sharp drop right after the PPI came out at 8:30 a.m. Eastern Time. Just no liquidity there, just a fast straight drop, and then just the slow grind higher up until this trend break just after noon. And a couple of interesting things to point out here. In this subchart in Bookmap, for those of you who may not be familiar, I have 3 lines shown in the subchart, and this darker blue line is cumulative volume delta, CVD. The yellow line shows stop orders. So, and this is both the stops and this light blue line, which are icebergs, are in summation mode. So they're showing the cumulative effect of buy stops here since the line is rising, and sell icebergs since this line is falling. So what it looks like here is that these larger traders with icebergs have been selling, and they looks like they're getting their way here as price has broken this uptrend and starting to move lower, and around that time the buy stop orders leveled off, and then the aggressive traders started coming in. And so as far as position analysis goes, the support and resistance levels are shown here on the chart, and I have this column. These are my cloud notes, and I mark these support and resistance levels are provided in the Spotgamma AM founders note every day, and I put those levels in my my spreadsheet, and they're updated here in that column. And one thing to note is these levels are given in terms of SPX, and then they're converted to the equivalent ES level. Now, Spotgamma is still using an 8-point difference between ES and SPX, and that what I see now is about a 2-point difference, and that point difference tends to narrow, get smaller and smaller as the quarterly rollover approaches. So it has been, I think, maybe as high as 10 or 11 earlier in the quarter, and now it has dropped down to about a 2-point difference. But anyway, I'm still using the levels that Spotgamma is using, even though the actual SPX level is about 6 points lower. So again, the here are the support levels at 39.50 and 39.60, and then the Spotgamma levels in play are shown in this column, and there's the 0 gamma level, and then the SPX 39.50 level. Also, the next thing that I want to talk about is some of the data that's provided in the founder's note, and shifts in levels. And I look at shifts and key gamma levels in SPX and SPY, as well as the stocks that I follow, to help develop a directional bias. So for SPX, or for the S&P 500, there really wasn't much. There weren't many shifts. For SPX, the volatility trigger shifted down, shifted lower from 4,000 to 39.85. And again, the volatility trigger is the Spotgamma gamma flip level. So that shows the where the gamma flips from positive above to negative below. And then the SPY volatility trigger dropped down from 397 to 396, so just a minor drop there. And then the SPY key gamma strike, or call wall, I'm sorry, excuse me. The SPY call wall dropped from 410 to 400. And then, if you recall yesterday, both the QQQ put wall and key gamma strike dropped down, and they moved back up today. So the put wall moved back up from 265 to 280, and the key gamma strike moved from 280 up to 290. So this is the data that I'm talking about. There's the volatility trigger, the SPY call wall, and then the QQQ, the QQQ put wall, and the absolute gamma strike, or the key gamma strike, the same thing. So the next thing to note is the gamma notional, and that is the market maker's position on the gamma curve. And yes, the gamma notional for the S&P 500 it's still negative, but it has shifted up towards more positive readings. So this is the data that I'm talking about. So yesterday, and this number is from yesterday afternoon, and I compare morning to morning. So yesterday, SPX gamma notional was minus 489, and again, that's the market maker position. So that means that traders in this region of the gamma curve are long puts, market makers are short puts, and they have to sell futures to hedge their delta exposure as price drops. And then as price increases, they can buy back their short future hedges. So they're trading in a negative gamma environment. They're trading with the direction of price. So that tends to increase volatility. So SPX shifted from minus 489 yesterday to minus 237 today. And then SPY was a pretty significant shift yesterday from minus 1218 to minus 686 today. And also the Spotgamma gamma index and the CP gamma tilt have both shifted back towards slightly more positive readings. And this is just the CB gamma tilt, or the Spotgamma index is an indication of positive or negative gamma, and below zero indicates higher volatility, plus or minus. There's no directional indication there. So just something to note. And in the last couple of days, I have talked about the potential for a put Vanna rally, considering all of the data coming up today and next week. And if this gamma, I guess, tends toward becoming more positive, that will eliminate or minimize some of that put Vanna fuel. And what that means, and this has occurred several times recently with the last CPI report, and also with the last time that Fed Chair Powell spoke, is SPY gamma was negative, very negative, like more than minus 1,000, lower than minus 1,000. And that means that, again, traders are long puts, market makers short puts, and if the market starts to rally, those puts quickly lose value as implied volatility drops, and market makers can buy back their short hedges, and that can lead to a pretty violent rally, and that's what happened with those last two events. But with this minus 686, there's still some potential for that, but not as much as those last two events. So just something to keep an eye on. And let's take a look at the S&P 500 charts. Oops. And here we can see that this is for SPX, the absolute gamma levels. 4,000 is still the dominant strike. And for SPY, 400 is still the gamma strike. And recall the call wall dropped down from 410 now to 400. And still there's still some, I guess, substantial put levels here below 400. And let's take a quick look at the Vanna charts now. I keep doing that. So what this shows is changes in market makers' delta exposure as price changes, implied volatility changes, and that's shown by the green curve, and that's the Vanna effect. And then also as time passes, and that is the charm effect, and that's shown by the black line showing the next expiration. And just very quickly, what this is indicating is this is still the S&P 500 is still in a negative gamma environment, and that is just showing that market makers' delta exposure increases as price falls, meaning they have to sell futures to hedge their delta exposure. And you can just see how it has shifted over time. And you can see the shift towards slightly more positive today in SPY and SPX. Okay, so again, all of that data leads me to develop a thesis for the day. And my thesis was for the S&P 500. I was looking for a little bit lower volatility than yesterday, based on the shift from negative gamma towards slightly more positive, and also based on the kind of the minimal shifts in levels in the S&P 500, I was really had kind of a neutral directional bias for the day. And then I was more bullish on QQQ given the rise in the put wall and the key gamma strike. So we've looked at the ES and Spotgamma here, or Bookmap, and now let's take a look at Spotgamma Hero. So I'm going to go to the Spotgamma Hero for, first of all, ES. And let's zoom in on that. Go to larger screenshot here, image chart. And we can see that traders are mainly, this blue line shows that they are, traders are buying puts. And this is for SPY and SPX. And we'll dig down and take a look at those instruments, just get a closer look at what they're doing. But net and SPX and SPY, they're buying puts. And this is probably mostly SPY. So overall, the combined signal is negative delta. And that's for ES. And notice how how these lines move with, or actually kind of lead price, and what traders are doing, and this is pretty typical, is they are selling peaks and buying the valleys. So when price rises, they start taking on negative delta positions, and when price falls, they start taking positive delta positions. But overall, on net, it is negative delta. Let's take a look at SPX. And here there's a very strong correlation between SPX and price action. And what this blue line shows is options that expire today, the 0 DTE options. And up until about noon or so, it looked like the 0 DTE options had a large impact on price action, and not so much after that. Then after that, I guess they really haven't done much. So again, remember, this is showing a cumulative value for the day. And what we can actually do is zoom in to a shorter look back period and see that the 0 DT options, now they are taking negative delta positions as well. And notice how traders, as price was lower here after the drop from the data at 8:30 a.m., traders were taking positive delta positions, and then as price started reaching a higher level, they switched and started taking negative delta positions, and price followed sometime after that. Let's go back to the full day here, turn on that. So here is a case where SPX options trades are having a strong impact on price action. Let's take a look at SPY, and pretty similar to the ES chart. Okay, like I said, I wanted to take a look at some stocks today. So the first thing that I want to do is review a setup that I posted yesterday, and this is for NVIDIA. And I'm going to quickly run through these charts. So this is the, again, this is from yesterday, and what it shows, this orange line shows that traders were buying calls from the open. And this is a very powerful signal that can drive stocks higher. As traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And as price continues to rise, their delta exposure increases, and they have to continue to buy, or their delta exposure, so they're selling calls, delta exposure decreases, so they have to buy stock to hedge their delta exposure. And they have to continue to do that as price continues to rise. So there's a very strong correlation here between price action and call buyers in NVIDIA. So that was step one in the setup. So step one, and I posted this on Twitter as well. For those of you who are not in Bookmap Discord chat. Whoops. Let me go back. So step one, we see that traders are buying calls, shown by Spotgamma Hero in the first chart. And then this chart shows, so that's, when you see that, then you Bookmap users, you would want to switch over to Bookmap and look for a potential reversal point. And here it is. It's just just a perfect setup here at this 160 key gamma strike. And that's where you expect the reversal to take place, and it does. And then I've shown a variety of, or a number of entry points here with this note 3, looking for just minor pullbacks shown on this higher time frame chart, showing entry points at small pullbacks. And as the dots, volume dots here shown on Bookmap, shift from pinks, with aggressive sellers there to aggressive buyers. And I'm showing 4 price targets with levels of high liquidity at 164, 165, and then the primary target at 170. And that is also the Spotgamma call wall, which can be expected to act as resistance and also a price target. And this chart ends around noon, and at the end of the day, traders did move price up to 170 and beyond, I believe. Yeah, so this is the Spotgamma Hero chart for their entire day, and you can see that traders were buying calls all day, and that was driving price action. So more aggressively in the morning, they slow down for several hours as price levels off, and then when the call buyers come in again after 1 p.m., price starts to rise again. And there was really not much going on with puts, the blue line. So definitely call buyers were driving price action in Netflix yesterday. Okay, so I just I wanted to review that yesterday. That was kind of a step-by-step approach. Everything you want to look for if you trade stocks. Again, the call buyers, so that that leads you to definitely look for a long entry, knowing that market makers are going to have to buy stock to hedge their delta exposure, and and they'll have to continue to do that as long as price rises. So, again, step one, you see that. Step two, you look at Bookmap. You see that 160 key gamma strike as a strong potential reversal point, and then the targets above at the liquidity shown in Bookmap, and especially at the 170 call wall. Okay, and this is now we'll go shift gears toward today. I wanted to review that from yesterday, and then this is today, and I posted this in the chat room this morning around just a little bit before 9:50, and today I sorted my watch list from the strongest stock to weakest, and this is by the hero signal, and the hero signal is showing the strongest signal in the last 5 days and the last 30 days. So here on NVIDIA, for example, this gray sliding scale here, kind of ellipse, shows the entire 30-day range, and then this smaller colored area indicates the signal for the last 5 days. So this is showing that the signal for NVIDIA is at its high point for the last 30 days and the last 5 days. So here you would see this and definitely be looking for a long entry. And the same with Netflix, and the same with Tesla. And these were the strongest signals and also the best setups. All right, now let's go back to the live market, and for those of you in Bookmap Discord, I posted the chart this morning in chat, so you can refer to that, and I'm going to go through that that chart in the or go through my stocks in the order shown in that watch list. So as you recall, the top stocks were NVIDIA, Netflix, and Tesla. So I'll start with those three. So first of all, let's go to NVIDIA, and this, as usual, is showing a very strong correlation between price action and options trades shown by Hero. Let's break out puts and calls. And really up until about 1 o'clock, call traders have been really driving price. Definitely up until about 11, even 12. So this is what has been driving price action. Traders buying calls, not doing much with puts. And price starts to drop a bit and level off as the as traders start selling those calls. And let's go take a look at Bookmap now. Let's go to NVIDIA. So a little bit choppy trend here, but definitely some good setups here. Let's just zoom in on this a bit. And recall yesterday the highest price target was the 170 call wall. And another clue that you would want to look for a bearish or a bullish setup on NVIDIA today is the increase in the call wall. So, and let me, I forgot to show this. Let me show my, this is a spreadsheet that I track every day. I track these are the stocks on my watch list, and I track the key gamma strike for these stocks and how they change from day to day. The key gamma strike is the strike with the largest absolute gamma, and watching how that key gamma strike changes from day to day is a good indication of changes in sentiment and also potential increase or decrease in price. So today, notice the increase in the key gamma strike for NVIDIA and Netflix. And one interesting thing to note is the key gamma strike for Tesla actually dropped from 180 to 170. But traders were in there buying calls today, as we'll see in just a minute. And then also there's the increase in the key gamma strike for QQQ that I talked about. And then finally for Meta and Snowflake. All right, let's go back to Bookmap now. So a little bit choppy uptrend, but some really good long setups in NVIDIA here with the traders buying calls. This clear target at 175. Notice all the liquidity in there, and traders finally consumed that. Price drops and then continued back up to test it again. And one other thing to notice here is as this liquidity comes in, that helps to support price and move it higher. So that was NVIDIA. Now let's take a look at the next one in the list. Netflix. Really nice clean uptrend for Netflix. It has been more choppy recently. And let's go take a look at Spotgamma Hero. And we're looking at Netflix. Very strong correlation between price action and options trades shown by Hero. And it's very clear here that call buyers and then call sellers are driving price action. And again, if you're looking to trade stocks and you're looking for a long entry, this is what you want to look for. And there are some nice dip entries here, pullback entries as price falls, traders continue to buy calls. So a little bit before 10:30 and then 10:50. Let's go take a look at Bookmap again. So there's the around the 10:30 before 10:30 setup, and then the 10:50 setup. And remember again that traders continued to buy calls. So that was the second stock on the list, with a very strong hero signal. And then the next one was Tesla. And I posted this in chat as well. And here I'm showing CVD in the subchart below, and showing that this corresponds with all the green dots here. A lot of aggressive buyers in there this morning, as well as call buyers, driving price action higher. Let's go take a look at Spotgamma Hero. And as usual with Tesla, there's a very strong correlation between price action and options trades shown by Hero, and calls are definitely driving. So for anyone looking for a setup this afternoon, it looks like traders are continuing to buy calls. Not a recommendation. And let's go back and look at Bookmap now and look for potential targets at there's the 183 liquidity. Whoops. And then the 185 call wall above. And I'm just going to check YouTube for questions, so give me just a moment. And Mitz asks, is this live option data? In Bookmap, everything is live. And then in Spotgamma Hero, everything is live as well. And so SPY option data, that's live. Yes, that is Hero stands for hedging impact of real-time options. So it's showing real-time data. So recall my two-step process. Preparation happens, and I use static data for that. That is based on open interest data that is released once daily, sometime during the night, and that is the raw data that Spotgamma uses to develop all these levels. So that is static data that's done once a day, and then the second part is execution, and that is looking at real-time order flow and Bookmap, and also again real-time hedging activity with Spotgamma Hero. And indicator for the reversal in the morning for what instrument? For the S&P 500. Let's go back and take a look at that again. So I don't know if there was any one indication. The ES dropped down to the lower edge of the expected move for the week, and then aggressive traders started buying, as well as buy stops started firing off. And then also recall that with SPX, we saw that traders were taking positive delta positions in mostly zero DTE options. So that was what was driving price action in the S&P 500. All right, let's get back to our stocks now. So it looks like as traders are buying calls again, Tesla continues higher, and again the first potential target there is probably the 183 higher liquidity. All right, so let's get back to the list now, And let's go to let's take a look at, I've got a couple of stocks on my other computer. I'll need to share that. These were the best setups today, though, the ones that I just covered. NVIDIA, Netflix, and Tesla. And the next, Shopify. Not really much here. Traders. Oops. There's a strong correlation between price action and options trades, but kind of choppy trade. And let's take a look at QQQ. And there was a pretty strong correlation between price action and options trades. And again, it looks like the traders are selling the high points and buying the low points, or fading the moves with options. And nothing really clear there. Let's go take a look at Bookmap, QQQ. This is pretty similar price action to the S&P 500. Sharp drop in the morning, then the steady grind higher until the trend break, and then price starting to roll lower. The next stock that I wanted to take a look at was Disney. And here there was a very strong correlation between options trades and price action. And definitely calls driving. And give me just a moment. I'm going to share my screen on my other computer, and we'll take a look at Disney. So there's Disney. Nice strong uptrend in the morning with the 95 hedge wall liquidity as the primary target. And let's go back and look at Spotgamma Hero again. And see that call buyers were in there driving price higher with Disney. And also Apple, which was actually on the lower end of the list, still was strong today. So the watch list and the ranking from strongest to weakest is just a suggestion, a starting point, but that the strong or weak signal doesn't necessarily mean that price is going to increase or decrease. it's a good, again, a good starting point, a pretty good indication, and it definitely worked for the top 3 stocks on the list. But here is Apple. And this shows that traders were buying calls, and that was not as clearly driving price action, excuse me, as some of the other stocks that we looked at. But call buyers were definitely in there, and that was driving price higher. And now let's go look at Bookmap. Another nice strong uptrend. Just like Disney. With a clear target at the 145 key gamma strike. So another great long setup here in Apple. So the key to these long setups today were just to look for the call buyers, and again, just follow what they're doing. Traders are buying calls, market makers are selling calls, and they have to buy stock to hedge their delta exposure, and that can drive a stock higher and higher, as we've seen with these examples. All right, the last thing that I want to take a look at is, let's go to Equity Hub now. And what I've done is I have ranked my Equity Hub watch list by this next gamma expiry, or next expiry gamma percentage. So this shows the amount of gamma that is expiring at the next expiration. And what you'll see is all of these stocks, this top gamma expiration date is today. And I'm looking at all these stocks that have a value over 30%. So when you see this, what you want to do then is look for whether traders are long puts or long calls, and look for a gamma unwind. And that can happen either today or Monday. And in the case of a call gamma unwind, that means that traders are long calls, and again, market makers are long stock to hedge their delta exposure, and as those calls start to expire, or come close to expiration, they start to lose value, and market makers can sell their long stock hedges, and the other way around for puts. In that case, if traders are long puts, market makers are short puts. It's like a Vanna rally. Those puts start to lose value, and market makers can buy back their short hedges. So the stock may rally. So let's take a look at Coinbase first. So we'll take a look at Coin, and we can see from this composite view, all the red here, that this is put dominated, meaning that traders are long puts, market makers are short puts. And let's also look at the put and call impact chart, and this also shows the blue line throughout the price range from 20 on up, shows that put gamma dominates call gamma. So let's go look at Spotgamma Hero for Coin. And we could see this morning that traders were selling their puts. And this is, let's just check. No, not really. Next expiration. But anyway, they're still selling puts. So, in that case, price has been increasing some up until around 12:30. As traders were selling puts, market makers were buying back their short hedges, and price increased. And let's take a look at Coinbase in Bookmap. And it looks like it was choppy up until about 10:30, and then there was the increase in price around 10:30 as traders continued to sell puts. So this is not a real clean example, but let's just go take a look in Bookmap. And we've looked at Netflix. That was another one on the list. And we saw that traders are still buying calls. So the gamma squeeze continues in that case. So I actually wrote an article about that, and I presented it at Spotgamma Bootcamp last week. And I don't think it's been published yet. I think Matt wanted to hold that. Matt, the CEO of Spotgamma, wanted to hold that for Bootcamp. But in this situation, and this was a monthly expiration, I was anticipating a call gamma unwind in Netflix. But just like today, traders continued to buy calls, so the gamma squeeze continued, and the gamma unwind actually happened on Monday. So that's something to look for on Monday for a stock that is call dominated. And Squeeze Trader asked, was Bootcamp recorded and available? Well, I know it was recorded and available for participants, those who signed up for Bootcamp. I don't know if that recordings are available for people who are interested that did not participate. I don't know. You might check with Spotgamma on that. And let's take a look at one last stock, and that is Snowflake. And this is also a put dominated stock. So we see that traders are selling puts. And let's go take a look at Equity Hub now, and we'll go to Snowflake. And in the current price range, we see that it is still slightly put dominated. We can check that on the composite view, and more of a lighter positioning here, kind of in the middle of the range. You can tell by the shade of red or orange there. Then Spotgamma Heroes showing that traders were pretty aggressively selling puts this morning. As price was rising, and then as they started to level off and start selling puts. And again, remember, this is in a cumulative mode, so this means they're just not doing anything with puts when the line levels off, and then price starts to drop after that. So this is just something to look for, kind of a preparation for next week and the large monthly expiration. Oh, and let's go look at Snowflake and in Bookmap. So there it is. So the sharp increase in the morning as traders were selling their puts, market makers were buying back their short hedges, and then prices kind of chopped around for a while, and then is dropped to a lower level and still chopping around. Okay, so just a quick summary. The best setups that I saw today by far and what I traded were NVIDIA, and the signals were clear. The strong hero signal, the call buyers in there, also with NVIDIA, the increase in the key gamma strike and the call wall, and Netflix, again the call buyers, and then in Tesla. And NVIDIA and Tesla were the two that I posted in chat room this morning. So clear signals to look for longs in those stocks. Again, the strong hero signal, call buyers. At that point, you're just looking for a pullback to get long, and looking for a price target, either liquidity and or a Spotgamma level. So that's all I have today. Let me just do a quick check for questions in YouTube. I don't see anything. So I want to thank you for attending. Thanks for your questions and comments. And again, have a great weekend. Thanks for attending, and I will see you tomorrow. Thanks. Bye.